I'm Charlotte McLeod with investingnews.com, and here today with me is Gerard Bond, President and CEO at OceanaGold. Thank you so much for being here. Great to have you.
Great to be on the show, Charlotte. Thank you.
Really good to be speaking with you. I'm excited for the conversation, and I'm sure many people in our audience will be familiar with you and certainly with the company. But I thought, since it's our first time speaking, if we could begin with a brief overview of yourself and your background in the mining industry.
Wow. Well, I'm the president and CEO of OceanaGold and have been for coming up to 4 years. Prior to that, I was the finance director and CFO of Newcrest Mining for a decade. And prior to that, I was at BHP Billiton for 15 years. So I'm coming up to my 29th year in the resources industry, and that spanned a number of commodities: gold, obviously, copper, aluminium, and everything that was in the BHP Billiton portfolio. I'm Australian, but I live in Vancouver, and the mining industry is global. It's been a great journey so far.
Well, thank you for that. I always love to hear how people came into the sector. And we're going to be speaking about what's happening at the company. But to set the stage a little bit, I thought we could look at the overall gold market right now. It's, of course, been quite an exciting year for the metal. We've gone up to all-time highs. I know we're a little bit lower than that at the moment. But I wanted to ask where you see gold in the cycle right now.
Yeah, well, I think the gold has certainly broken to levels that is outside of a cycle, as it were. It has been quite the step change. It's at levels in real terms not seen since the late 70s, early 80s. And I think there are a number of factors that are driving that. And I don't think those factors are going to change anytime soon. So you'll see de-dollarization as people, institutions, central banks, investors around the world are looking to gain an exposure to something of value other than US treasuries or US bonds. There is concern about stagflation risk, and as that other time that gold prices have been so high, it was in that stagflationary environment of the late 70s, early 90s. There's been an enormous amount of central bank buying ever since around 2022, and that's at a scale and of a buy and hold nature that is, very different to the norm. And I think those three, and then there's just general geopolitical uncertainty. And I think the combination of all those four things have powered the gold price to where it is today. It's up 60% year to date. And, it does move around, but the journey has been relentlessly up. And I think those factors that I spoke of that has powered it to this point, I'm of a personal view that I don't think they're going to change to any great degree anytime soon.
I think that's a great overview of the situation with gold right now. Certainly, there are a lot of factors working in its favor. And let's take a look at how the company is faring in this environment. I know about a month ago at this point, there were the Q3 results coming out. It looks like on track to meet guidance for the year. What would you pull out for investors from those Q3 results?
Well, the key takeaway for us is that as a quarter, we flagged, and it proved to be the softest production quarter of the year for us, because we were, by design, just completing a number of open pit stripping campaigns, and that meant that we had lower than average grade for the year going through the mill in the third quarter. And so notwithstanding it was our lowest production quarter for the year, we still generated $94 million of free cash flow and generated substantial profits. So even in a soft quarter, we were able to exceed market expectations by quite some degree in terms of the cash generating ability of this company. And that was at an average gold price of just shy of $3,500 an ounce. So I think what people were looking to ahead, and the results call very quickly move to a look forward lens. In the fourth quarter, we expect it to be a strong production quarter, and gold is sitting around at $4,200 an ounce. So and then again, there's a bit to run in the quarter, of course, but $700 an ounce higher gold price at a much stronger gold production rate. And the nature of the industry is such that when you are producing more ounces, you absorb some more of your fixed costs. So in the fourth quarter, we expect to have much stronger gold production at a better all-in sustaining cost. enjoying a higher gold price. And so the prospects for strong free cash flow, strong profitability in the fourth quarter is really high. And then everything that's driving the fourth quarter is what's also driving 2026. We have been at our two largest mine sites, Hale in the USA and Macraes in New Zealand. We have been actively removing waste from the two large open pits there. That's been the investment of this year. We got to the ore in both of those pits towards the end of the third quarter. That's what powers the fourth quarter, and that's what also powers our production growth in 2026. So 2026 is shaping up to be a really attractive year.
Yeah, it sounds like it. And good takeaways from Q3. You know, you mentioned it was a softer quarter, but still with the strong results. And I think that, you know, investors had to wait some time to see the higher gold price reflected in miners' results. Now I'm hearing a little bit more about how generalist investors are also starting to take notice of the strong results from gold companies. So I wanted to ask what you're seeing from an OceanaGold perspective. Are you seeing the generalist crowd start to take an interest in what's going on at the company, either at the retail or the institutional level?
The short answer is yes. I mean, both retail and institutional are getting a lot more interest, and rightly so. The cash generating capacity of an operating gold company is at this point in time particularly strong. And we're, as an example, we have free cash flow yields on our market value of 17-18% over the last 12 months, and that's and the return on capital around 15-16% as well. That's and that when I spoke about free cash flow yields, that's free cash flow after tax, after all investing dollars. So there aren't many businesses that are giving people strong mid-teens and above free cash flow yields on the share price, and that certainly attracts retail investors, and that certainly attracts the generalists. I think we're early days into a rotation by generalists into gold equities, but at OceanaGold, we've certainly seen a big uptick in retail interest, and we've seen early signs of generalist investors coming back into the space, which is really good.
It's nice to hear that you're seeing that generalist investor interest. I think that's very encouraging. For those who are already in the gold space, they're a little bit more familiar. I think a concern that they might have right now is that even though the margins are strong at the moment, eventually we might start seeing miners' costs start to rise, and then these very strong margins begin to get eroded. So I'm wondering what you're doing to perhaps mitigate that possibility.
Yeah, well, I mean, we're lucky. As a gold company, every one of our four assets are producing. So, the biggest investment we had in our asset base this year was those two open pit stripping campaigns that I just spoke of, and that's now largely behind us. And so if you're producing ounces at scale, and again, we're growing production Q4, we're growing production 2026, our unit costs are expected to fall. Most of our costs we have really good line of sight on, and from an inflationary perspective, we're not doing different activity than we would have been doing otherwise, just because of the high gold price. And I think that's important. We're not chasing marginal ounces here. The physical nature of what we're going to do is driven by the ore bodies. Our ore bodies have a very clearly, they define the mining plan for us. And so we're not chasing and expanding just to get a gold that we don't make profit on. The investment that we've made is giving us an uplift in average grade to existing mills. So we're not doing plant expansions. We're not chasing marginal ounces. And then as it relates to input costs, we've got really good line of sight on those. I mean, 40% of our cost base is labour. There are inflationary pressures on labour, but low single digit. Energy costs, ours are variously fixed. Contracts for electricity and so forth. And then there are consumable costs, and there are some variations around there, but generally in low single digit nature. So taken together, we aren't seeing any great cost expansion. Now, what the opportunity does do when the gold prices are strong is to invest more in your business. And so, we have plenty of those opportunities as it relates to improving the integrity of of your fixed plant, improving the integrity of your rolling equipment, just to make sure that you operate more days per year, because the production loss and the cost of that production loss, if you have an unplanned breakdown in the plant and so forth, is now higher than it's ever been before. So there's really good investment opportunities for OceanaGold and our shareholders to inoculate from those variations.
Yeah, so it sounds like you've got that well under control. And I also wanted to touch on the exploration aspect with you, because of course you've got all of this production going on, but I know that recently the company had some drill results come out. There was a draft decision on fast track approval for one of the projects. And I wanted to check in on that, because I know that a lot of the time when we hear about gold producers, there's maybe a little bit of a lack of exploration investment going on, but it seems like you're balancing that with everything else you have.
Well, 2025, we're investing more in exploration than we have done ever as a company, and I expect we will invest more in exploration next year. We do that because we have a tremendous track record. I think over the last 12 years, we've added something like 5 million ounces of reserve at a addition cost of $50 per ounce. And so when you see gold selling today for $4,200 an ounce, and we've been able to add to reserves at a cost of $50 per ounce, that's profound value generation, which is why we keep investing in it, which is why we have deeply experienced and committed exploration teams through the cycle. So we will continue to invest in exploration. We've got really prospective ground at and around our existing mine sites, which is really a fertile and attractive places to add reserve ounces to, because you already have an existing mill, an existing workforce, existing power and infrastructure. So we'll invest more there. The announcement that you spoke of, is the Waihi North project, and we got a provisional approval of our permit in New Zealand to develop the Waihi North project. That's a super exciting development for us and New Zealand. It's a very high grade 1.2 million ounce reserve ore body presently, but we believe with more exploration that will grow. It's our plan to develop that safely, responsibly. It's going to be a completely underground mine, near invisible at surface, with no surface expression or impacts. That makes us really excited about doing something well, and through exploration grow that ore body. This year we've only been able to have 3 drill rigs on it, but as part of our permit, which we expect to be approved on around the 18th of December this year, that permit allows us to double the amount of drilling with 6 drill rigs, and doubling the number of drill pads from the current 10 to 20 in 2026. So you can expect over a number of years we will continue to actively drill that really exciting ore body, ferrocarripon.
That does sound exciting. And I wanted to ask a little bit more about gold in New Zealand, because I believe, if I'm remembering correctly, it's a critical mineral in New Zealand, which from a North American perspective might be a little bit unusual. I don't think it's on any of our critical minerals lists over here. So I wanted to ask you about that and learn what it's meant for the company, if that's helped to speed things along at all. Any thoughts you would share on that note?
Yeah, the government released its critical mineral strategy in the last 12 months, and yes, gold went on it. It doesn't alter what we do. I mean, we're grateful for the fact that it's regarded as critical by the country. I think the investment and regulatory regime that has now been introduced into New Zealand is world leading. I think they are looking to make resource development, in fact, any development, done expeditiously. That doesn't mean it's done quickly or in any way cutting corners, but we all, in our investment applications, and the same for the Waihi North project, have to meet really stringent tests. But what the process allows us to do, and maybe the critical minerals badge has helped, is allow it to be done in a timely way, where all requirements are considered simultaneously, such that the process of getting the approvals is done promptly and timelessly. Because these opportunities to invest, you want to take them when they present and not be dragged out for a long period of time, that erodes the ability and confidence of investors that this is a place to invest in. So I think New Zealand has made itself a very attractive place to invest in, both the combination of the new legislation as it relates to permitting, but also the critical minerals legislation. But when you have an ore body of the type of Wharekirauponga that underpins the Waihi North project, critical mineral or not, that is an attractive investment for us and the country to have developed.
Well, and we have been focusing a little bit on what the company is doing in New Zealand. I know you've also got operations in the Philippines, in the US. Anything you would add looking forward to 2026 that we haven't covered for those assets?
Well, I mean, Hale's our largest producer presently and will become an even larger producer next year. And that's as a result of this open pit investment that we made this year to do a very large cutback that gives us excellent access to much higher average grade ore for the remainder of this quarter and into 2026 and beyond. And so that's a big investment that shareholders are going to get the benefit of in coming periods. We also have the underground mine there that's operating well and continues to ramp up. So Hale's entering a really interesting period of much higher gold production, like materially higher gold production than it's achieved in the past. That will help lower its unit costs and ensure that it becomes and remains, the most meaningful contributor to our success. I mean, Macraes, likewise, it will have a big fourth quarter and a big 2026 as a result of the investment in the open pit waste removal there. And in the Didipio in the Philippines, they will have a slightly better year next year as a result of overcoming some of the challenges that they have successfully addressed this year. And then Waihi has had a fabulous year. We said at the third quarter results that it is going to produce, we expect, at around the top end of its guidance range. So it's great to be in the gold industry and have a company that has 4 assets that are all operating well, and all the sales are up and catching this wind of strong gold prices. The one thing that we haven't spoken of is that in April 2026, we are going to list on the New York Stock Exchange. And we're really excited about that because we think, with a predominantly US asset base at the Hale Gold Mine, that'll be, somewhere around 50% of our gold production next year. We believe that's a great thing for US investors to get more exposure to directly by being on the New York Stock Exchange. And we're super excited about, getting the benefit of a wider access to investors, a broader investor base in what is the deepest and most liquid capital market on the planet. So we're super excited about that April listing.
Well, that was certainly on my list to hear about, and I think we've got all the details now on that as well. So that will definitely be something to look forward to into 2026. I will let you go unless you had any final thoughts or words of advice for investors as we're heading into 2026. I think it's been an interesting year for precious metals investors, and looking forward, it certainly seems like 2026 will be the same.
Well, look, I mean, if gold prices stay at or around these levels, even at the level that we had in the third quarter, which was $700 an ounce lower than we had today, companies such as OceanaGold are able to generate meaningful profits, substantial free cash flow, provide a tremendous return on the capital invested in the business, and it's a great time to be in the gold industry as an operator. I think it's a fantastic time for investors to get an exposure to operating gold companies that are performing well, such as OceanaGold.
Well, thank you so much for coming on to share about the company and the market. Great to have you, and hope to do it again soon.
Thanks, Charlotte. Appreciate it.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Gerard Bond with OceanaGold.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.